MMT, we're going over the Google weekly, this weekly moving average. Okay, it's your 10 week. We're taking a look at where that top reversal happened and how this stock got all the way down here on this weekly level and has had its peaks and its pullbacks with the rising 10 week is what I'm getting at MMT for the new ones. Not only that, it's important for you to understand that there is a weekly distribution. We can't take out these highs, and this half weekly bar right here is as long as we can't close above it, we would keep buying what? The Google puts. And what would we be looking at? I have the Google puts right here for the options division. Check this out. I can go to a weekly or I can go to an August regular right here on Google. And what would I be looking for? The same thing that we always look for, the $900 put. Look, the $900 put on Google right now hit a low MMTs, a 624, and the high of that contract from that bottom up to that high was 1750, and they closed right around 1360. So when Google was having that weekly reversal that we showed you, it's very clear that this is wholesale at the $900 put level on a monthly, and that as a market maker you need to do the following. You need to be assertive for one reason. And why do I say that? Because what happened there? Oops, I did something wrong. The thing that you need to know is that when Google went through its earnings report, it got slammed down to 860 after hours that day. We have the live trading video buying it off the bottom long in the name of the equity. At that point in time, what ended up happening is that these contracts had peaked up here to $59 on the open, and then they went to $59.72 on the high, and that calendar date was on 6/3 when that contract was way up here at 57.50 on this weekly level. Right now, $6.24 with the $10 up range based on what? Based on the following. Here's the Google 920 reversal. Can't break above the half bar. Yes, you can buy off of the bottom. That's what a market maker does. He takes it straight up on those days. And you can buy off of the bottom here. But look, the weekly side of this is that you keep shooting up to the 910 area, and you can take clear look right here at that $900 weekly put. It's putting the bottom in when you're having that top down from 910 down here to the low of this last week or the first week of August. I mean, the low is 885 now, and that was on 85 right here. 10-week moving average comes into play at 891 now, and it's slightly below the 10-week, and that's this 10-week. This is a very strong bull run stock, but it's the dog days of August. So when we are looking at where the transactions, we can clearly see that with the weekly reversal. Not only that, let's take a look at a 60-minute reversal. Every time you're selling down, you pop up in volatility and you sell down. Look at those. Look at here. You pop up to 908. That was a short. That's what's happening in August. We called for it that way. So, what's been the trade management all along on our high beta names is to hit those puts at the bottom when these things are reversing off their intraday highs. That's how the bottom of 624 got put in this weekly contract, and we're showing that on a weekly level, and this is on a 60-minute level now. Okay, and yes, you can buy the dips. Bam, there's that bottom of 885 on the 60-minute level, and that's when these puts were probably hitting the bottom here when we got up there. and we went through this whole thing. But every time we keep selling off. Look, on the 60-minute level. Look at the sell wicks. Look, this was just the last calendar trading day. Okay, today is 8/10. So buying and understanding as a market maker is, if I'm buying down here at $7, which I am, the closing at 13.60, which it did, and with Google going on another time frame, and this is based on Google breaking below the 10-week moving average, and once it breaks below 10-week moving average, it's going to come down to 880 here on this weekly level, and it's got a lot of support there. But here's the most important thing. When we come down here, and when we break below the 10-week, we're going to see here, you can see before when it pulled back and it finally got below the 10-week, but these were good pullbacks, but great rallies up. So the volatility of the earnings is out of the way. Not only that, if we break below the 10-week and we come down here and test this line, we break below that 880 handle. Of course, we're going to have pit stops along the way, and you're going to bounce. You're going to have up. It's a very strong stock, so you have to trade the bottom up on an intraday level, meaning you have to go long the days off of support while you're having your $900 cheap, the $900 strike price over here paying. And I'm going to conclude the $900 puts with my new MMTs. And the thing that I am going to just tell you, the important thing as an MMT market maker is being wholesale to the risk over here. Okay, these contracts, I mean, look at it, $40 here, $30, $32. Look at these highs over here. They went $25 all the way back down here. We're on our way up based on the weekly reversal coming down to test the 20-week. That's where it was in after hours. It was at $860 when they just reported their quarterly reports a few weeks ago. And after hours, they dropped down there and they ran it back up and made all-time highs. This date right here, just so you know, was 6/24. And the highs that we put in over here, were 9/28, and the low was 8/75. So it was 8/75 all the way up to the high. Look at here. So when that breaks lower, these are going to go higher in value. This will apply to the rest of the stocks that I show as far as call and put ratios on all of them that we trade when they have these big reversals.